Welcome to After the Bell, the Capitalist versus Consumers Daily Market Report. Here is everything that moved the market today, Wednesday, May 27, 2026. The Dow hit another record. Oil crashed more than 5% on an Iran deal breakthrough. Snowflake surged 25% after hours on a massive AWS deal. And chip stocks pulled back after their extraordinary run. Let's get into it. This video is for educational purposes only and not financial advice. Please hit the like button and subscribe so you never miss a daily report. The numbers at the close. Today was a split session. The Dow Jones Industrial Average gained 182 points, or 0.36%, closing at a new record of 50,644. The S&P 500 eked out a tiny gain of 0.02%, closing at another record of 7,520. The Nasdaq edged up 0.07% to 26,674. All three hit new closing records, but barely. The gains were modest because chip stocks pulled back meaningfully, offsetting broader market strength. The headline of the session: Oil. West Texas Intermediate crude fell 5.55% to settle at $88.68 per barrel. That is the biggest single-day oil drop in months, and it is the most important data point for everyday Americans we have seen in weeks. The Iran draft deal. Oil crashes. The catalyst for oil's dramatic decline was an extraordinary development out of the Middle East. Iranian state media reported that Iran is committed to restoring commercial traffic through the Strait of Hormuz to pre-war levels within 1 month. A draft version of a peace framework was reportedly published, the most concrete written progress toward a deal since the conflict began. The White House has not yet officially confirmed the deal. There is still uncertainty about whether this represents a final agreement or another false dawn. But the market's reaction was clear and immediate. Oil fell more than 5% on the news. Here is what $88 per barrel oil means for you. Gas prices will fall at the pump within days, typically tracking oil moves with a 1 to 2 week lag. Lower gas prices reduce household expenses directly. Lower energy costs reduce corporate input costs. Lower overall inflation gives the Federal Reserve significantly more flexibility and meaningfully reduces the 45% rate hike probability that has been hanging over the market. If this deal holds and oil continues to fall toward $80 per barrel, the entire rate outlook for 2026 changes. Rate hike fears evaporate. Rate cut expectations return. And the stock market, particularly rate-sensitive growth stocks, gets one of the most significant positive catalysts available. Snowflake. The after-hours story. After the close, Snowflake reported earnings, and the stock surged 25% in after-hours trading. Revenue grew 33% to $1.39 billion, beating estimates of $1.32 billion. Adjusted EPS of 39 cents beat the 32-cent estimate. The company guided for higher adjusted operating margins. But the headline number was not even the real story. Snowflake announced that Amazon Web Services will pay $6 billion to use Amazon's new Graviton chips, one of the largest single cloud commitments to a new AI processor in history. That announcement confirmed that the AI infrastructure spending story is not slowing. It is evolving and expanding to new chip architectures beyond just NVIDIA's dominance. Salesforce is selling off after hours, down approximately 2.8% after issuing light guidance for fiscal year 2026. The split between Snowflake surging and Salesforce falling illustrates the market's current framework perfectly. Beat and raise, rewarded. Miss or guide light, punished immediately. Chip stocks pull back. After yesterday's extraordinary session led by Micron's 19% surge, chip stocks took a breather today. Several semiconductor names declined modestly as investors took profits after one of the most remarkable sector runs in recent memory. One notable concern emerging in the market: Uber's chief operating officer warned about the cost of AI spending in 2026. Days after Microsoft sunset its Claude Code licenses amid cost concerns, the theme of AI cost discipline is starting to appear in corporate commentary. This is worth monitoring. If major enterprises begin pulling back on AI tool spending, that is a headwind for software and cloud companies, even as hardware spending remains strong. Dollar General downgraded. Deutsche Bank downgraded Dollar General from buy to hold and cut its price target to $110. The analyst cited a weaker consumer and conventional grocers potentially shifting prices in a way that could hurt Dollar General's margins. Since the Iran war began and gas prices started putting pressure on consumers, Dollar General's stock has fallen more than 30%. This downgrade is a stark reminder of the K-shaped economy. The S&P 500 is hitting record highs, and Dollar General, which serves lower-income Americans, has lost a third of its value since the war began. The pain is not evenly distributed. What to watch tomorrow? The Iran situation is the most important story in the market right now. Any official confirmation of the draft deal framework sends oil sharply lower and triggers a significant market rally. Any breakdown in talks sends oil back above $95 and revives rate hike fears. Snowflake's 25% after-hours surge sets up a strong open for cloud and AI software stocks tomorrow morning. Consumer spending data and jobless claims release tomorrow, giving a fresh read on economic health heading into summer. The SpaceX IPO roadshow developments continue to build. Watch for any pricing guidance this week. The bottom line, today's most important number was not any stock price. It was $88.68 per barrel. Oil falling more than 5% on an Iran deal breakthrough is the single most significant positive development for inflation, for the Federal Reserve, and for everyday Americans since the conflict began. If the deal holds, gas prices fall, inflation comes down, rate hike fears evaporate, and the Fed gets room to potentially cut later this year, that is a scenario that benefits every American, investors and non-investors alike. Stay diversified, stay consistent, and watch the Iran confirmation very closely tonight and tomorrow morning. That is your After the Bell for Wednesday, May 27th, 2026 here at Capitalists vs. Consumers. Please hit the like button and subscribe. Turn on notifications so you never miss our daily report or weekly breakdown every Friday after the close. We will see you at the closing bell tomorrow. Affiliate links, small commission at no cost to you. Educational purposes only, not financial advice.